Welcome back. Now we're going to talk about the adjusting journal entries we have to book at year end to accrue interest. So remember I said that we only pay interest on short-term notes payable at the end. When we pay it off, we pay the whole amount of interest. However, if the term of the note crosses our year end, and in this case, December 31st is going to be our year end, then we need to do an adjusting journal entry, an AJE, at the end of the year to accrue the interest. Remember, the purpose of adjusting journal entries was to make sure we book revenue or expense in the correct period. In this case, this AJE to accrue interest is going to be to make sure our interest expense is booked in the correct fiscal year. Okay, so our example is we have a note payable. The date of issuance is December 1st, 2018, and the principal is $10,000. The term is 30 days. And the interest rate is 3%. Okay, so you can see we issued the note on December 1st, and the term is 60 days, so we're for sure going to cross over a year end. So first we're going to prepare the journal entry to record the note. We're going to debit cash, credit note payable for the principal amount, which is $10,000. Next, we got to figure out on which date must the note be repaid. All right, let's come over here and we're going to do it here. So, December has 31 days. The note was issued on the 1st, so 31 minus 1 is 30 days that the note is going to be outstanding in December. Then we go to January, and if it's a 60-day note and the note's outstanding for 30 days in December, then it's going to have to be outstanding for another 30 days in January, for a total of 60 days outstanding. So on which date must the note be repaid? January 30th, 2019. Okay, now how much interest must be repaid at maturity? So at maturity, we already know the formula, right? It is principal times our interest rate times term over 360, so 10,000 times 0.03 times 60 over 360, and for these things, guys, you can round to the nearest dollar, is going to be $50. So when we pay it off, we're going to have to pay $50 worth of interest. All right, that's good to know. Now the question is, for how many days is the note outstanding as of December 31st? And we already decided the note was going to be outstanding for 30 days in December. So the answer to that is 30 days. So how much interest is going to be accrued into December 2018? So to accrue interest, it's going to look very similar to when we calculate how much interest we have to pay at the end of the term. But the formula is going to be principal times the interest rate times days outstanding at year end divided by 360. So instead of the numerator being the whole term, it's going to be the number of days outstanding. In this case, at December 31st, our principal still is $10,000. Our interest rate is still 3% or 0.03, but the number of days that the note's going to be outstanding at December 31st is only 30 days. So it's going to be 10,000 times 0.03 times 30 over 360, 30 being the number of days that the note's outstanding in 2018. Okay, so our AJE at 12/31/2018 is going to be a debit to interest expense and a credit to interest payable for the 2018 interest. Okay, so we're going to debit interest expense, credit interest payable for $25, and that is our 2018 interest. All right, so then we need to figure out what's the journal entry we're going to book on January 30th when we actually pay off the note. So I'm going to do some erasing. So we're going to pay off the note on January 30th, 2019. We're still going to debit note payable for the amount of the principal. Then we're going to debit interest payable for the 2018 interest we already accrued. Then we're going to debit interest expense for the January interest. And to calculate that, we calculated last time on the previous board that total interest was 50. 2018 interest is 25. So our 2019 interest is going to be 25 as well. So we'll debit interest expense for 25. And then we're going to credit cash for $10,050 to pay off all of the interest at once when the note is due, okay? So when we cross a year, we have to book a journal entry to accrue the interest, and that gave us a liability in interest payable of 25. When we actually pay it, we relieve the liability with a debit, and then we debit interest expense for the current year's, the year we're paying it off for the interest that's due in that year. In this case, it was 2019. All right, so you should have some practice problems you can go through. Go ahead and work on those on your own or with a friend. And once again, I will get the answers posted up onto Canvas. All right, that is going to conclude notes payable.